Six stocks I'm buying now, October 2023 edition. Welcome in, folks. It's my favorite video I do for you guys each and every month. We're about to get into six stocks that I am extremely bullish on and why I'm bullish on these stocks. We're going to go in depth on all six of these stocks here today. I had to put on my orange sweater for you guys, my one and only orange sweater, since I thought it was appropriate now that we're in October now at this point in time. Last month was a bit scary. You'd usually think October is a little scary. September was scary for the stock market in general. Very bad month, to say the least. Look at the indexes. The Dow was down 3.5%. The S&P 500 is down nearly 5%. And the NASDAQ was down close to 6% in the month of September. So a lot of opportunities have emerged over the past few months in the market. And so there's a lot of stocks I'm very, very bullish on. So we're going to get into these six stocks. And I'm also going to share some other stocks that I'm definitely considering that maybe aren't for sure buys for me for this month, but definitely stocks I'm strongly considering as well. So I appreciate every single person for being here. Thank you so much. Thank you for being subscribed, folks. And I just want to get straight into this. I appreciate y'all being here as always. Okay, so first one of these six stocks up here, PayPal. This stock is Mr. Easy Money, I call it, for 2024 and beyond. This stock is very similar to Meta last year. So Meta was a very popular stock that was beaten down heavily last year. It was down about 70% last year. A lot of people had kind of thrown in the trash, and nonetheless, every single person out there wants to buy Meta stock this year. They're falling over themselves. Last year, there was people selling Meta stock at $88. This year, there's people buying Meta shares for $300+. What a difference a year can make. And so I'm not sure PayPal necessarily has that much upside as Meta did last year, but it has a tremendous amount of upside, and I believe a lot of that's going to come to fruition in 2024 and beyond when it comes to stock. When I'm buying PayPal, I'm getting the PayPal service, obviously, which is a monster. I'm also getting Venmo, and I'm getting Braintree as well. I'm getting three extremely exciting businesses. Now, Alex Chriss just literally started in the company basically last week. September 27th, he started with the company, so end of September. He's moving into the position Dan Schulman had before, and Dan Schulman did a pretty good job running the company, but it's a broken stock. It's not a broken company, and there's a big difference. When you come in like an Alex Chriss, and he's coming in from a very important position from Intuit, essentially, which Intuit's one of the best stocks in the market the past 10, 15 years. When you come into a company like this, you can either come in two ways. One, it could be a broken stock. One, it could be a broken company. PayPal's numbers are not broken. The numbers are phenomenal. We're about to go through those in just a moment. But this is a broken stock right now, and he's got to fix really the stock and maybe just tweak a few things in the business to get this, let's call it, roaring once again. Now, the company's trading at about 11 times this year's numbers and 10 times next year's expected numbers, so 2024 numbers. Folks, that is extremely cheap, and especially for a company that is expected to grow high single digits growth over the coming years, year in and year out. This is extremely low valuations, like on the floor. That's why this is a broken stock right now, not a broken company. You'd look at something like this, right? This came out in September. Uber and PayPal are going to expand their relationship, but I thought this was very important here. As part of the agreement, PayPal and Uber will continue to build upon their substantive relationship for global card processing powered by PayPal's Braintree, which Braintree is basically a back-end service that a ton of massive companies use to basically process all their payments and do a lot more. In addition to conventional card processing, Uber will leverage the PayPal Braintree platform to expand its use of domestic debit network routing in several markets, including in the United States. Uber will also leverage PayPal value-added services, including PayPal payouts, interesting, and several other that support in creating seamless, high-performance payment experiences for Uber customers. That's phenomenal. So, Uber and PayPal, obviously two giant companies getting more, let's call it a much closer relationship. And it goes to show you the power of really PayPal. It goes way beyond just like somebody pays with that thing. It's way beyond that, folks. And so you see it in these big relationships here. Now, if we look at the numbers for this company, we can look at it on a GAAP basis or a non-GAAP basis. This is their latest quarter they just reported. Revenues were up 7% year over year on a GAAP basis, generally accepted accounting principles. Operating income was up 48%. Earnings per share were up 414% on a GAAP basis. If you want to look at non-GAAP, some people believe more in non-GAAP numbers than GAAP numbers because you can take one-time things out and whatnot. Okay, non-GAAP numbers, net revenues were up 8%. Operating income was up 20%, and earnings per share were up 24% year over year. So whichever way you slice it, the company has very strong growth. And that's even in this tough consumer environment that we've been going through when it comes to inflation, right? Now, Cash and cash equivalents on the balance sheet of over $5.5 billion for this company. Short-term investments of about $4.4 billion in this company. And don't be surprised if that cash balance builds up over this next, let's call it a couple quarters here. Total assets of the company of about $74.5 billion. Total liabilities of the company about almost $55 billion in total liabilities, which makes for total equity just under $20 billion for PayPal overall. Now, the company's actively buying a lot of their shares back right now, which I think is a great decision. They've been buying a lot of shares back over this past year, and I think this is just a phenomenal time period to take advantage. I do not believe PayPal stock is going to be in the 50s forever. I do believe this is going to be a $100 plus stock, $150 plus stock, and eventually a $200 plus stock again. And so I think the company should take advantage of buying as many shares as they possibly can back right now, folks. And I can't always say that for all companies, but for PayPal, great decision to be buying back these shares. Now, for me personally, when it comes to PayPal, I'm going to be buying the stock until basically the first quarter of 2024. In the first quarter of 2024, at some point in time, I'll stop buying PayPal stock. And the reason being is not because I think the stock's going to be $150 then or something like that, or not even because I don't believe in whatever price it's trading at. It's just I'll have my position built out at some point fully in Q1 of 2024. And it'll just be a situation where there's no need to add any more shares, very similar to how I have several other stocks at this point in time. And so basically, my full position should be finished up within the next 3 to 5 months in terms of how many shares I want to own. So absolutely love PayPal. Throw it in the filing cabinet. I'm very happy with this one, and I think the performance will be tremendous over this next, let's just call it 3 years or so. Alrighty, PayPal. So PayPal, obviously, is probably actually the stock I'm adding the most aggressively right now, and will be the stock I'll probably be adding the most aggressive out of any stock in the market for the remainder of this year, okay? And then I'll be able to start backing off my buys in the first quarter of this year, and I think PayPal has a brilliant, obviously, 2024 for the company and the stock, and obviously I think it has a phenomenal long term, right? PayPal. So what's going on here? Well, a few things. PayPal has announced that users can now add their PayPal and Venmo credit card and debit cards to Apple Wallet, which is still earning the same cashback and rewards for eligible purchases. The new integration means that users can use the cards and make contactless payments in store and use iPhones and iPads and Macs to make purchases in apps and on the web using Apple Pay. All right. To get started, users should open the Apple Wallet, tap the plus button, then add debit credit card option, right? Cards can be scanned or card details can be entered manually. PayPal says that users will be able to use this directly in the PayPal and Venmo apps in the coming months, right? And so at the end of the day, when it comes to this, everything PayPal and Venmo's up to, a lot of it comes down to one word. One word, okay? Do you know what that one word is? Convenience. Convenience, okay? Convenience is key in this payments game, in this payments ecosystem. Convenience is the reason that if I get an option to enter in my credit card when I go to buy something or PayPal, I do PayPal. Because to get my credit card, I got to go to my room and get my wallet. Versus PayPal, it literally just, I hit the button, it scans my face, and boom, I'm ready to rock and roll. I didn't have to get up, didn't do anything. Convenience is always so important in this game. And so anything PayPal and Venmo can do to make people's lives more convenient is a great thing. Anything they do to make people's lives less convenient is a bad thing, okay? And so if you want to talk about trying to become the biggest giant you can in the finance space, you need to make people's lives convenient, right? I never had ordered anything from DoorDash before, but DoorDash basically has an exclusive relationship with Cheesecake Factory in North Italia, which Cheesecake Factory is probably one of the top stocks I'm buying right now as well, right? And so I wanted to try it out this weekend. So I downloaded DoorDash because usually I just use Uber Eats. And when I was greeted with payment methods, look what I got for options. Credit and debit card, obviously, that should be one, right? Apple Pay, PayPal, Venmo. And then Cash App, which no one uses. No, I'm just kidding. But those are the options I got presented to me, right? So 2 of those options are, guess what? PayPal and Venmo. And plus, if you had a PayPal credit card or debit card, you could also have used that there. So there's really multiple different options there. That's just a thing of beauty, right? Just a thing of beauty. And guess what I used? PayPal. Because it was easy. Literally, I clicked that button, it scanned my face, and boom, away. And the order came in. By the way, food was good. Not as good as eating there, but it was pretty dang good, okay? So PayPal, really excited there. Now let's go ahead, let's jump into PayPal. Then we'll talk about the rest of the stocks, things going on in the market, some fishy things I saw today, and we'll go from there, okay? PayPal. People say PayPal is done, PayPal's finished. Absolutely finished. When I hear that, I say, okay, emotional talk. Let's look at the data. Let's look at the numbers. Here's what we find. PayPal's, this is their most recent quarter they reported. Net revenues, this is on a GAAP basis, okay, generally accepted accounting principles. 7% revenues were up. Operating income up 48%. Earnings per share up 414%. And those are GAAP numbers. Does that sound like a company that is done? A company that is finished? Anybody that I think, has gone through one semester of business school should know, no, that's freaking amazing, okay? What about on a non-GAAP basis? Non-GAAP basis, because some people like GAAP numbers more, some people like non-GAAP. I look at them both, okay? Non-GAAP basis. Revenues were up 8%. Operating income was up 20%, and earnings per share was up 24% year over year. That does not look like a company that is done or finished whatsoever. If their revenues were down 7% and their operating income was down 48% and their earnings per share was down, in an epic way, I would say, yeah, you could be right. Maybe the company is finished. But these numbers don't smell finished at all. And keep in mind, we've been actually in a goods recession for all these, the past year or so when all these quarters that PayPal reported. And they still put up these numbers. Like, imagine if we get out of the goods recession, what PayPal's numbers could potentially be, right? And on top of that, you got Alex Chris, just started at the company September 27th. And this is a man that comes over from Intuit. You can't get too excited about a new CEO and president, but it is, I think it's pretty darn good when you can attract somebody that's a top tier talent from one of the most respected companies in the entire stock market and one of the most respected stocks in the entire stock market, which is Intuit. So I think he's going to be able to do a few things. And the great thing for Alex Chris, he doesn't need to fix a million things. This is no disaster. This is a company he's coming into. Look at the numbers that he's coming into. I mean, they're freaking phenomenal on a GAAP and non-GAAP basis. The fact is, Alex Chris only needs to tweak a few things here and there, make sure everything's running smoothly, and be able to tell the story better in regards to the shareholders in the stock. And oh my gosh, okay, we're off on a rocket ship ride. And the beautiful thing about PayPal, right, is the freaking valuations on the floor. We're talking about an 11 times this year's numbers for PayPal. 11 times this year's numbers? It's a joke. That's absolutely insane, folks. Absolutely insane. That's what makes it such an attractive risk reward. Now, what I want to see is, has PayPal stock performed severely worse than their peers? Or is the reason the stock has gone down so much is really just the sector they're in, the type of stocks they're in, that these stocks just can't do anything right? So let's go ahead and take a peek here, okay? So we can compare them to kind of Hood, obviously Affirm, Square. If we want to take it a step further, we can add on SoFi, okay? So this is since basically the Federal Reserve started raising rates. So it's right around here, okay? So since the Fed started raising rates, roughly, Hood's down about 27%, SoFi's down over 30%, PayPal's down about 49%, Square's down 56%, and Affirm's down almost 57%, okay? That's since the Federal Reserve started raising rates. So what does that tell you? I can tell you exactly what that tells you. That tells you that all these stocks were doomed because the Fed's raising rates. And it has nothing to do with their business models. Their numbers can be phenomenal, their revenue and their earnings per share, but the bottom line is, like, people looked at it and they said the Fed's raising rates, we want no piece of these stocks. And the thing is, like, PayPal is not the same as Square. PayPal's not the same as Affirm. PayPal's not, in no disrespect to SoFi, PayPal's not the same as SoFi, PayPal's not the same as Hood, but they get put in the same category. And so the bottom line is, if the machines and the humans are all just saying, I don't want any piece of these stocks, the Fed's raising rates, that's what you got. That's what you got. And that's why that stock is down as much as it's down. There's nothing really the stock could do, right? And it's performed better than Square and Affirm, so cool, but it's not saying much, right? The bottom line is, people want nothing to do with these fintechs when the Fed was raising rates. But the question is the Fed going to keep raising rates, right? And we're dealing with the highest Fed funds rate we've seen in 20 plus years now at this point in time. It looks like the Fed's about done raising. You can make an argument that maybe they'll raise one more, but listening to what I listen to when it comes to these Fed officials, former Fed officials and current Fed officials, it sounds like they're probably done, okay, in terms of raising rates. They'll probably keep us here for a little bit, which means the pressure is going to alleviate these stocks in 2024, because the Fed's not going to keep raising 6, 7, 8%, and so on and so forth, right? We're going to likely stay where we're at until maybe we start to see some weakness in the economy. If we start to see some real weakness in the economy at some point in 2024, then maybe the Fed will start to consider cutting rates. But the work's already done by the Federal Reserve. They already did their work, and now they're just kind of sitting on that work and letting things play out there, right? And so ultimately, when I look at this story, when I look at the PayPal story, it's shaping up pretty darn good from several different angles. And, to take this one step further, did you guys see this? I thought this was really important. No one was really talking about this yesterday, but I was like, this is so freaking important. Everybody needs to be talking about this, okay? A coalition of housing trade groups, the Mortgage Bankers Association, the National Association of Realtors, and the National Association of Home Builders all sent a letter to the Federal Reserve. And basically what this letter was basically begging for is for the Federal Reserve to stop raising rates, okay? I can tell you, the Fed takes that type of stuff very, very serious. And when you see something like that, I can tell you the Fed's going to be like, okay, these guys are starting to beg us not to raise rates anymore. Okay, that's something we got to consider strongly. The next step is starting to beg to lower rates, right? And then you're dealing with a whole different dynamic. If you start to beg for the Fed to lower rates, then you're in a lot of trouble, okay? You're in a little bit of trouble if you're begging the Fed to stop raising rates, and a whole different ballgame if you start to beg them to cut rates, right? So that's why just another one of many reasons that I think the Fed is on this path and kind of looking at inflation numbers and whatnot, where they're going to keep, because at the end of the day, now we're at a point in time where the federal funds rate is significantly above CPI. That matters significantly. So the question is, when will I stop buying PayPal stock? And by the way, the company has buybacks on right now. So they're going to be able to buy back stock at, in my opinion, the best prices this company will likely ever see. We'll see what happens, obviously, but I think it's a pretty dang good time to be buying back shares at the current P the stock's at and forward P, right? So I'll stop buying this stock in the first quarter of 2024 at some point. First quarter of 2024, I will be done buying this stock. I'll finish off my buys. I'm obviously continue to buy it through year end, and I'll buy it some in Q1, and then I'll be done. And then I'll have my position fully built out, and then it'll be just holding and, seeing what happens. I think I'm going to do very, very well on PayPal over time. But the state of the stock price, I think doesn't really have much to do with the fundamentals of the business. And I think we're going to see a very, very nice recovery, very similar to and I think we're going to see that recovery in 2024, very similar to what we've seen in Palantir this year. We'll see how it all plays out. And by the way, PayPal's not going to be the only beneficiary. You're going to see the other companies benefit from that as well that are in this space. You'll see stocks like Square and others likely bounce as well. But so very exciting. There, PayPal. Oh, you want to talk about obliteration. The stock's now down 26% this year, down another 3% here today. I mean, it's just a dog being a dog is what we call PayPal, okay? I'll give it permission to stay down until first quarter of 2024. I'm done buying the stock in the first quarter of 2024. So until then, stay down, baby. Stay down in Chinatown. I'm a little worried about earnings coming. And when I say worried, I'm actually worried for upside potential for the stock. Because one, it's going to be Chris's first conference call. So I think it's going to be probably a pretty good conference call. My guess is numbers are going to be very, very solid for the company overall. And I think things are going to be looking good. So if anything, I'm expecting the stock to pop on earnings, but I do hope it goes down. Hopefully, the new CEO, Chris, maybe smokes a big fatty before the conference call, preferably from the Planet or preferably from Avant. And that way he's kind of like, I don't really know what I'm doing around here, PayPal. What do we do for business again? Maybe, and that could cause a little weakness on the stock. But yeah, I'm not going to hold my breath on that. So I'm trying to add as aggressively as I possibly can with that stock. I bought some stocks here today. What did I buy? Well, I bought 3 stocks, okay? I bought PayPal, I bought Cheesecake Factory, and I bought Texas Roadhouse here today, right? PayPal, still big focus for me right now. Got to continue to build this one as rapidly as I possibly can. Yeah, I got to build that one rapid. Okay, rapid. Cheesecake Factory, continue to add to that one. I love the valuation on cake right now. Arguably the most well-run restaurant chain in the United States of America. Really the only one you could argue with is Texas Roadhouse. It's really between them and Texas Roadhouse. I think Texas Roadhouse takes the cake, no pun intended, in regards to the most well-run restaurant chain in the United States of America. But both those are just, I got to, cake and Texas Roadhouse, I'm not working with as much, so I'm buying Texas Roadhouse, I'm buying Cheesecake Factory, and I'm, buying those stocks along with many other stocks, but I'm not working with as much urgency as I am with PayPal. PayPal, I'm much more worried and scared it's going to start going up very soon. I'm much more worried about that one starting to go up fast than I'm worried about Cheesecake and Texas Roadhouse, because I don't think the worries around the consumer necessarily go away, but I am very concerned about when Alex Christ, the new CEO of PayPal, starts to tell his story on, how they're going to improve this and that and tweak a few things here and there. And I'm very concerned that stock could, let's just call it, start to perform very, very well very soon. Whereas cheesecake in Texas, I'm not as concerned, okay?